traders, Raghee here, and today we saw news from OPEC that there's going to be a 400,000 barrel per day increase. So what does that mean to crude? Why didn't it sell off? And how could we trade connectedly, relatedly, RBOB gas, heating oil, and even oil stocks in terms of this move? Now, this is the way we can start with an individual catalyst for a move. Take a look at the touchstone market for oil stocks, for gasoline, for heating oil, and start to play multiple asset classes. And this is where trading gets a lot of fun, when you see all that interconnectivity. So diving into the structure of crude, it continues to be very bullish. We've got all the cues that we would need between the JT multi and the grab candles. And why would 400,000 more barrels per day, more supply, why would that be bullish? Because it was already factored into the market. And if expectations were that this number could have been more and it was only 400,000, then that's even more reason to rally. And again, all that being said, crude has continued to move higher. And again, remember, the structure that we're looking at is what justifies now the dip buys. So we're open to dip buys. And I would start looking for dip buys maybe as soon as 74.5 to about 73.35 on the front month of crude oil. Then that sort of extends, right, to RBOB, which has not organized into an uptrend. But if crude's heading higher, pretty good expectation that RBOB could. But RBOB is far more sensitive to the narrative around reopening. So that's something to keep in mind. More disappointing narratives around reopening, or just more disappointing narratives around just people getting out and about. There is a high degree of correlation to traffic, to basically all the COVID-related narratives when it comes to RBOB. So crude oil might be your better, cleaner play with energy. Then that brings us to heating oil. Now we are coming up into winter, and a lot of questions start getting asked about heating oil. Well, it's not surprising that as we come out of September, as we approach the winter months, there is a tendency for heating oil, even earlier in the year, to start organizing into an uptrend. So after crude oil, the next most interesting market for energy is heating oil. This heating oil market actually organized into an uptrend even in front of crude. So there could be a seasonality, a demand play also playing out in HO. Dip buys starting at even as close as, say, 2.27, absolutely in play. The closer we get to 2.22, 2.23, even better in terms of this being the zone for buys, continuation plays in heating oil. So crude oil, then heating oil. Now, how does that affect the ETFs, right? And if you've never thought about how crude oil then affects XLE, OIH, XOP, you're definitely going to want to join me on Wednesday, where we're going to dive into the way in which understanding the connectivity of stocks to ETFs, and in this case, we're even going commodity to ETF to stock, but that relationship is one that you can take advantage of that not many traders really necessarily do. And it's actually unfortunate that most traders have sort of a bottom-up approach where they might have a favorite stock, they might have a favorite setup, but they're not necessarily honing it into relative outperformance and fine-tuning a watch list. And that's really what ETFs have made increasingly clearer and somewhat easier since '08. And it only becomes more impactful. And we'll explain why. It's explained in the data, the flows. I mean, the high concentration weighting, it's there. And it will continue to be an outsized influencer over stocks. And in this case, we're going to go crude oil to oil stocks to the relative outperformance even to individual names. And what might some of those names be? COP, ConocoPhillips, EOG, Marathon. And you can see where now that connectivity is a whole lot cleaner and clearer, because crude oil now getting past the OPEC narrative gives us the confidence to say yeah, it makes a whole lot more sense to get long oil stocks if we're also interested in getting long oil. Now that could be crude, full size, micro, or even calls and USO. So there's a lot of ways to choose your own adventure through the futures and relatedly, and it really is related through the futures and relatedly the ETF market. So check out simplertrading.com/trend. I'll see you on Wednesday and in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.